Hello guys, this is Vinit from Edge-Forex, and today's session is going to be different, and it is going to be, I think, one of the most important sessions that I have conducted in the recent past. And today I want to bring some stats in front of you guys to show you guys how close we are, in my opinion. Okay, I can be wrong. I have been wrong in the past, and I will be wrong in the future. So take everything that I tell you with a grain of salt. That said, I've got loads of information and why I think there's going to be a paradigm shift happening very, very soon in our economy, when it comes to our economy, when it comes to the markets, when it comes to cryptocurrency. Things are going to shift fundamentally all across the board. It's not just about tariffs. It's not just about business cycle ending. It's not just about cryptocurrencies going to moon. It's not about uh, metals, precious metals going all-time high. It's a combination of everything that I see coming together at the same time. And I don't know what the reaction or what is going to cause, but it's going to cause something very, very dramatic. And I want to make sure that I share with you guys. It's my fiduciary duty to share with you guys what I see happening in the marketplace and give you my 2 cents as to what you can do to protect yourself and how you can actually maybe benefit out of it, maybe make some money out of it. So when we are out of this phase, we are there on the other side, not as badly hurt. One thing is for sure, guys, everybody is going to get hurt in the next couple of years, 3-4 years, because we are in the fourth turning. And I spoke at length about it in a couple of my sessions about how everything is a season. Right now, we are in the winter season, and that is where all the delusions, all the illusions are wiped. So as Warren Buffett says, when the tide goes out, you see who was swimming naked. Now is the time when the tide is about to go out. So that said, let's talk about what I see. The underlying underlying strengths of the market that are shifting from strength to weakness. And we are in that shifting phase right now. And there are 4 things I want to cover today. Everybody's talking about housing market, housing glut, housing, there's not enough housing, and there are a lot more people than they're building the houses. I beg to differ, and I'm going to show you guys why, because I have some concrete numbers that I want to share with you guys, which is going to change the way you think altogether. Then I want to talk a bit about why everybody is thinking about that the Fed rate cuts are guaranteed, they're baked in the cake, and I want to take the other side of the bet. What if they aren't? And I'll tell you what is what is my thought process as to why I think it's not as sure as everybody think. All right, then I want to talk about crypto. I want to show you guys a chart of Bitcoin where I think a 70 to 80% correction or a crash is in the books, is imminent in my opinion. And also, I want to show you guys a couple of charts around NASDAQ. So I'm talking about everywhere from housing to crypto to NASDAQ. Everything is kind of coming together at the same time, and results are going to be dramatic. They're going to be dramatically, they're going to be chaotic. There's going to be a lot of chaos that's coming in the next couple of years for the United States markets, not just the U.S. markets. I'm talking markets worldwide. Everything is none of it is going to be the same in 5 years from now. The markets, the way they work, is not going to be the same. The cryptocurrencies, the way they work, it's not going to be the same. The money you spend, the money you use, the whole definition of money is in process of being changed. Everything is being digitized. The dollar is going to be digitized. The dollar is going to be on some kind of ledger. So now the government will have full control over exactly how you are using your dollars or pounds or euros or any currency you may have. So none of it is going to be the same in next 4 to 5 years. I don't want to be a doom monger. I don't want to be that, but it is my duty to share with you guys as to whatever I find, which I think is earth shattering. It is going to be the game changer for everybody in this on this planet. Everybody in this world is going to be affected by what's going to happen over the next 2, 3, 4 years. So let's jump into some hard numbers, and these are not numbers that I made up. These are the numbers coming out of BLS, Bureau of Labor Statistics. These are numbers coming out of EU's statistics department. These are official numbers. None of this, I'm not going to make any of this up. And even if I wanted to, I can't make it up because these numbers are absolutely crazy. Okay, guys. So now every year in the United States, so let's take United States as the example, and picture is no different in the entire developed world. So if we take United States as an example, there is the demand of 4.3 million houses annually. So the new houses that are needed for the people who are coming to age that they want to buy a house, say people in the mid-20s, they're finishing their college, they want an entry-level house. So there is a demand of 4.3 new households that are coming every, in the next 25 to 2030. So that's about 850 to 900,000 houses a year demand every year. Now, where is the supply going to come from? The supply comes from people who are actually downsizing. Think about boomers. There are going to be 7 to 8 million boomers dying every year from now to 2030. Okay, let me bring up another figure here. Okay, so that'll give you a little bit better picture of what the image or what housing glut looks like. There is no shortage in the housing market. If anything, there is going to be a glut in the housing market. And I just want to show you guys how bad that glut is going to be. Because every year, there is going to be the demand of new 860,000 houses. And there's going to be a supply of 2.7 million. So there are going to be 3 times as many houses as there are going to be new households. So let that sink in. So for every 3 houses, there's going to be 1 buyer. What is that going to do for the pricing of the house? Think about it, guys. It is going to have an absolute devastating effect of the housing. Housing is going to crash in real terms, not in inflated dollars. I'm talking in real terms. In terms, houses measured in gold is going to crash. It is crashing right now. Housing measured in gold has crashed over 70% already in the last 5 years. Let that sink in. And it has to a lot further to go. Now, imagine 3 houses for every new household that is coming to the market to buy that house. That's how dire the situation is going to be over the next 2, 3, 4, 5 years. There's going to be a glut, not a shortage, a glut of houses that people are not going to be able to afford. That is going to cause this huge crash to the tune of 60, 70, 80% from current prices in real terms before actually it becomes viable again. Because now, if you have so many houses just sitting, investors are going to come in because they are not going to buy houses by numbers. They're going to buy houses by blocks and then turn them into investment properties. And eventually demand will pick up. But before demand picks up, there is going to be a huge demand destruction before that turns. So now 7 to 8 million boomers are dying every year, and that's going to happen for another 8, 9, 10 years. Till that inventory is absorbed, there is going to be a glut in the housing market. And what is that doing to commodities? What is that going to do? Because I have another very, very interesting chart for you guys. So I hope that one thing made sense. There is not going to be shortage of the housing in the market. There is going to be glut in the housing. So there is going to be a crash like we have never seen before. Okay, so let's talk about Fed rate cuts. So now Fed, all the time he comes out and says they are only dependent on 2 numbers. One is inflation, other is unemployment. Both inflation is going up, it's not going down. Fed's ideal inflation rate is 2%. Right now, inflation is over 3%. Okay, Fed's ideal unemployment is 3.5%. Right now is higher than that. So how can Fed cut rates when inflation is higher? How can Fed cut rates when the unemployment is so close to where they want it to be? If anything, they should be bringing inflation down. So is it 100% that Fed is going to cut for the month of August? I don't think it is 100%. And that is the shock that I don't think market is ready to absorb. I don't think market will be able to absorb. If Fed comes out and says they're not dropping the interest because the data doesn't allow them to drop the interest rates, that is going to be the straw that broke the camel's back, in my humble opinion. I could be wrong. That's has happened before. It's not like I'm always right, I'm always wrong. So that's how I see it. I found this image funny, where you have this donkey always, the carrot is dangling in front of this investor donkey about this Fed rate cut, a rate cut that never actually comes. Is there a possible of that happening? If that happens, that is going to be absolutely, absolutely crazy, and it is going to, bomb the market like anything has ever happened before. The markets are as is primed to crash. And I think if that happened, that could be the catalyst that investors are looking for to get out of markets and to crash the markets. Okay, let's go to so now we've covered is the housing. We have covered how Fed rate cut is not as sure as you may think. So let's now look at what else is chasing the market lower. Okay, let's look at this particular chart right here. Let me zoom in a little bit more. Can I? No, that's about one little bit more. Yep. Okay, so now Bitcoin has reached its upper resistance channel. So if either Bitcoin rips through this or it comes crashing down 70 to 80% to the support that it needs, because that's what it does every single time it reaches that channel. So on top of that channel. So now Bitcoin is in a very, very precarious situation right now. If the stock markets, and the other thing is, let me show you this one. I'm going to come back to this chart again. Let me show you this particular chart. Do you see similarities? This is NASDAQ. This is NVIDIA. So all these charts are forming a similar, if not exact same pattern that has happened so many times in the past. And the result also is exactly the same every time it has happened. So NVIDIA, NASDAQ, Bitcoin, all these things are forming this exact same pattern that has happened so many times in the past. And every time it has happened, there has been a crash of 70, 80, 90%. Which direction you would rather be in is what my question to you guys, because I know where I'm at. Okay, so that said, so we looked at Bitcoin. I think is about to crash. Once it does, beware, it gets going over all the way down to 20, 30, 40,000, 20, 30,000, 70 to 80% crash is not out of the question for Bitcoin. All right, guys. So let's go. Next thing I wanted to show you guys was lumber prices. Remember, I was talking to you guys about housing, how housing is going to be a glut and not a shortage. Let's look at this right here. Lumber prices fell from 700 all the way to 600 in a matter of a week. So that's a 15% drop in lumber prices in a matter of a week. What do we need most when we are building houses is lumber. So the raw material, the commodities are already signaling that, hey, there is not enough demand for new housing. There is not enough demand for the lumber to build new houses. So all these things on the periphery are telling us something big is lurking right underneath the surface, and it's about to come right out roaring, and it's going to get us by surprise. And which I don't want us to be caught by surprise, because we are seeing all these symptoms. We are seeing all these markers that are all pointing towards something ominous that is around the corner. And I just want to make sure that I show you guys and I share with you guys what I see happening in the real time. Okay, guys, so let's see what's next. What's next is, again, the tech and NASDAQ warning signs. Okay, guys, that's the chart I showed you guys about NASDAQ and NVIDIA and NASDAQ. Look at how similar they are, but that's not the story. The story is in behind the numbers. Yes, you see the chart. Yes, you see the similarities. You see a crash coming. But once you scratch the surface, once you go one level further, that tells you a story that is a lot more clearer than just looking at these charts. And that is what I'm going to unfold right now. Okay, guys, ready for this? Here. Now, the NASDAQ 100 composite is composite of 100 tech companies, mostly tech companies, in an index that they all come and they get weightage to the actual composite. So now if you look at the top 5 companies, guys, NVIDIA, Microsoft, Apple, Amazon, and Meta. NVIDIA is 14% of NASDAQ, Microsoft 12, Apple 11, Amazon 7.5, almost 8, and Meta 6.31. And they all, the top 5, they are over 50% of NASDAQ 100. So there are 100 components or companies included in the NASDAQ. They're right here. And the top 5 constitutes the 50%, over 50% of value of the entire NASDAQ. So the bottom 95 companies have less than 50% share of NASDAQ. Let that sink in. When this kind of tilt happens, where all the money gets concentrated into 1, 2, 3, 4, 5 different companies in a composite, that's a red sign. These kind of things happen in dot-com bubble, where everything was in bubble territory, and then next thing we know, there is a drop, there is a crash of 80 to 90%, and that's the kind of crash I'm looking at. That's where I'm seeing the pain trade is. Remember, guys, market will always inflict the most pain to most people that it can. That's how markets work. So this is another thing, is warrant is forearmed. So I just wanted to today kind of compile all these things that I've been seeing and following for last so many days to show you guys where things are and how you can, how you can save yourself, or how you can actually get out of the way of things. Cash. Number 1, stay in cash. Precious metals initially are going to take a hit, because now when market starts to go down, there will be margin calls. Margin calls will force everybody to sell whatever they can, whatever is liquid at the time. The first thing is, the most liquid is precious metals. What else is going to sell off? Crypto. That is going to be a sell-off like never before. So now, what is the catalyst? Your guess is as good as mine. I don't know what the catalyst is going to be, but I have a gut feel. It could be Fed not cutting. It could be another Trump tantrum. It could be a war getting out of hand. It could be so many things. There's so many catalysts that are out there, and there are so many of markets. There are so many investments that are out of control. They're priced for perfection, and nothing is perfect. And once everything is priced for perfection, it usually dips on the other side, and it starts falling and it starts crashing. And I think that's what's going to happen. So the cash, the dollar, precious metals are the place to be for the next certain amount of time. And also, guys, Buffett, he's the most successful investor of all times. He is holding cash. His cash holding is at the highest. Let's do a real-time lookup. Okay, guys? Okay. Berkshire Hathaway. Here we go. CNBC. Warren Buffett has a record amount of cash on the sidelines. Here is how experts recommend balance saving and investment. They know something is happening. Why is Warren Buffett holding a record amount of cash on the sidelines? Because he wants to buy when there is blood in the streets. And he's selling everything. He's selling when everybody else wants to buy. He's going to buy when everybody else is going to be rushing to sell. That's how you make generational wealth. And I've spoken enough about it in the past. That you cannot become wealthy, generationally wealthy, by diversification. Again, that's not a topic for today. I've covered that in the past, and maybe I'll cover it in more depth in the future. But now is the time to worry. Now is the time to look at plan B, C, and D if you can. That said, that's all for today. I will be back tomorrow. Till then, you guys have a great day. And my idea is not to scare you guys. My idea is not to create panic. My idea is to educate. My idea is to show you guys that, hey, there's something lurking underneath the surface, beneath the surface, and you should be prepared for it. You should start looking into, what if situations. What if this comes true? Buying a little bit of gold is not gonna make you go broke. It's something that it will go higher over time. Keeping 3-4 months of cash is never going to be a negative thing. So think along those lines. And I'll talk about preparations and what I'm doing, all of that in another video. Is getting a little longer than usual. So I'll call it a day. You guys have a great evening, and I'll talk to you tomorrow. All right, guys. Thank you. Bye.